In previous part you saw we could use RSI with its own moving average. Next, we can use stochastic with 50 simple moving average, 50-day simple moving average. Although moving averages are lagging indicators, but sometimes they act very good filter to learn overall direction of market, especially a 50-day simple moving average, which can be used with momentum indicators, where we can take every trade that forms in momentum indicator in the direction of moving average. Let's go ahead and see some examples. Following is a chart of Bosch Limited, which is in an uptrend along with its 50-day moving average, simple moving average. I'll make it look better by changing its color and thickness. Change it to yellow color with thick style. Now you can see the moving average clearly. The idea is to buy into this stock every time stochastic reaches the level of oversold or the level of 20, and buy this stock in the direction of moving average. As you can see, the moving average is steadily rising up. There is no level where moving average changes its direction towards the downside. So throughout this chart we will only look for buy trades, reversals that occurred in the range of 20 or in the oversold region. Let's go ahead and zoom into our chart and go back into the data. You can see first reversal occurred at these levels somewhere here. Give it some other color, something that will look into this chart. Alright, so now the idea, since moving average suggests that this stock is going towards the upside, the idea is to buy when stochastic reaches oversold zone and sell when stochastic reaches its overbought zone. So we buy it here, and once stochastic reaches the overbought zone, we will trail our stop loss strictly and we move out here. Again, stochastic reaches the oversold zone and trigger a buy signal at this price, and reaches oversold zone, overbought zone, we trail our stop loss strictly and we are stopped out here. Again, let's go ahead into the chart. You can see stochastic reaches oversold zone here, and our idea is to sell the stock once stochastic reaches the zone of overbought, but we will place a stop loss at recent swing low. As we all know, market, you cannot predict market every time 100%, so we'll go ahead. By the way, take a look at moving average. It is steadily rising. Nowhere does moving average give a negative level or negative reading. We are stopped out of our trade. Stochastic has again reached the zone of oversold. Stochastic cues buy signal, a bullish crossover. We will buy into this chart at this level. Idea is same, stop loss here. We will sell once this guy reaches the level of overbought. Overbought not reached here. Overbought region is reached. We trail our stop strictly below 1 bar low, and finally we are stopped out at this price. Going ahead, let's see if there are any other trades. No, the data ends. So you can see 50-day or 50 period moving average can work as a very good trade filter to find overall direction of the market, and you can use stochastic to trade into the market. This is a very simple trading system where all we want or all we wish to do is trade in the direction of 50 period moving average. Buy when stochastic reaches oversold zone and sell when stochastic reaches overbought zone. Similarly, in a downtrending market, if 50 period moving average is trending downwards, Then we will look to sell when stochastic reaches over bought zone, and buy into our stock when stochastic reaches oversold zone, exact opposite of what I showed you right now. In our next example, following is a chart of VPCL, and as of the current buy you can see 50-day moving average is the yellow thick line plotted on price chart, and in the lower panel you can see a stochastic oscillator with 1233 as its. Let's go ahead and add some charts. Our idea is still the same. If 50-day moving average is moving upwards, we will look to buy into the trade once stochastic oscillator reaches oversold zone, and sell only when stochastic oscillator reaches overbought zone. Let's go ahead and add some bars. Fast line of stochastic oscillator has reached the level of 17.66, thus breaching the oversold zone of 20. We can now consider buying into the stock once there is a bullish crossover. There you find a bullish crossover, and even the slow line has now given a reading below 20, thus telling us that this stock at current price levels is reached its oversold zone. Following the crossover, we will buy into this stock if next day prices cross above this recent high. High was not crossed, stochastic is still positive. We'll revise our entry price. High is still not crossed, stochastic is still positive. Revise, revise, and bingo, we are entered into the trade. Stop loss is kept at recent swing low, and idea is to sell only when stochastic reaches the level of 80. Let's go and add some bars. Stochastic didn't reach the level of 80. Stop is still kept untouched. We have a new swing low. Revise to the new swing low. You can see moving average is still going positive. Even in these levels, moving average is still positive. Stop is untouched or unchanged. We are only going to sell either we are stopped out of the market or stochastic reaches the level of 80. Add some bars. Stochastic reaches the level of 80, prices make a new high. We will now aggressively revise our stop losses. Stop loss revise to this price, not stopped out yet. Revise to this price and stopped out the next day. So entry was made here with this as stop loss, revised to this price, and we exited at these prices. In complete process of the chart, you can see moving average is steadily rising higher, suggesting that prices still have more upside to come. Thus, you can use stochastic oscillator with 50-day simple moving average and trade in the direction of 50-day simple moving